The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Another day into broadcast excellence, at least for me. And of course, we've got an interesting market, although bifurcated, extremely bifurcated. Of course, we're off about 2 points on the S&P cash with 2 billion shares. So volume probably a little bit better than the last few days, but not significant. Of course, it's the disparity between being down 2 points on the S&P, but then we go look at the Dow Jones, and of course we're off 67 points, on that. And then we go look at the NASDAQ, and we're up almost 29 points on it, and 1.1 billion shares on the NASDAQ today. So the question is, what is this market telling us? And I think that we need to go a little bit beyond the indexes. And as they say on MTV, behind the, what is it? It's always behind the musician or something like that. They had specials that were always behind the music. That's what it was. It was behind the music. And they, it always this over dramatic person speaking about different things, but it was always very over dramatic and high camera angles and everything else. But as we look at the day, what is it telling us and why? And all I can do is look at the dollar index, 97.88, and say next week we're testing 100. It's hard for me to believe that we get through the week without testing it. You just continue to look at the, if we wanted to, the TLT, but we'll look at that in a little bit. But to me, it is that we're holding in at 2.34 or 35 for the yield in the bond. And I'm not a big bond guy. I'm learning more and more about trading that market as time goes along. I'm much more of an equity guy and, of course, technology. But you'll learn more things as you go along. And what I can't see out here is any way that the dollar doesn't test 100 next week. So why would the Dow be down? Who's going to be hurt by the strong dollar more than anybody? All those stocks in the Dow. A little less hurt because there's a little more diversification. The S&P 500. Who's going to be the least hurt, maybe even the best helped? The NASDAQ, and it's up today. And everything, you go in there, you look at that, you look at 5-year lows and gold today. And I've got a bunch of emails. In fact, you can call me, or you can email me at path@tfnn.com if you want to look at anything. I think I answered all the questions of emails over the last few days. So if you have some new ones out here, I either talked to somebody or had an email yesterday that I accidentally deleted about gold and what I thought here. And I said, well, you're basically looking at one of these things where it is almost like Google. And that is that when we went into the close yesterday, I actually did the data 8 o'clock last night. We actually went in for Google last night. They were looking, no one knew what was going on in Google, apparently. Option players were looking for downside as far as 480 and upside as high as 670. I think it traded to $700, didn't it, today? But 703. So what do we have going on? We've got a market that is very tough to call, even for professionals. In fact, I was going to get to it later, but I'll probably talk about it today. One of the best guys on the fundamental side of the market is Herb Greenberg. He's on CNBC quite a lot. He's got some new gig where he's doing something else, and I don't get a lot of heads up on when he's going to be on. And I fast forward and try to catch him just to see if he has anything, because he's pretty much a good book kind of guy. He's not a technical trader, but he'd been on Google's rear end for about 2 months, about 8 weeks coming up here, telling everybody about what big problems they had in their accounting. And whatever problems they had there in their accounting were overshadowed by what I'd been talking about the last few days, and that is the absolute deluge of ads that were on YouTube as of late, actually about the last 10 weeks. And that looks between making sure that no one spent any money on anything ridiculous like Google Glass or other side projects, cutting them down on what they spent on self-driving cars and all the other pie in the sky things that won't pay off for another 20 years. They actually were able to start selling ads. And it's hard to see that this one quarter is a trend, but they were able to do it. My question is, as they approach the same amount of ads that per hour, if you watch a bunch of YouTube videos, they basically break down to about the same amount of ads you would watch if you were watching broadcast TV. And I wonder, in this on-demand age where people can go to Netflix, if that isn't going to just drive people away. And I don't know the answer to it. I wanted to have downside exposure in case Herb was correct and blew up. So I bought some quarter calls in the VIX. They're going to go unexpired, but basically I bought $250 worth of protection. If they were right, they would have probably been worth about $2,500 today. And I was looking for a 10-to-1 replacement. I thought my odds were about 50-50. And, of course, I would have taken those kinds of bets all day long and hoped to come out. I was wrong on it. But, again, if there is any secret to the market, it is betting a little and getting a lot. And, well, my failed trade just gets me one time closer to the payoffs that I've enjoyed for over 10 years in the in trading options expiration. Of course, when we actually look at the charts, there is, and that expectation of being 50% right is two things. One, I figured that the odds that we were going to have a higher S&P today at about 5%. I thought we'd probably pretty much topped out yesterday. The options expiration chart that I'm showing now pretty much shows a pretty good indication that they're going to try to expire this thing right about at the pain level, but we're still what 0.5% higher than that. That's about right. Doesn't mean you're going to get there, but it does mean the bias is that way. So it's the wind's at my back, but we had to move down about 15 points for those options for me to pay off. But, you know, just a pullback of 15 points in the S&P wouldn't have been anything more than a blip in this market. That we're off 2 points. Maybe gives bulls a little bit of solace going into the weekend. Maybe just short covering too. But I like asymmetrical bets. They don't pay off, and like I've said it many times, depending on what you're doing, a lot of people think that trading is playing football and you're the 1971 Miami Dolphins and you win 16 games in a row. You win the 4 preseason games. You win every single game you play that year. And for most people, that is not true. It's about limiting your losses and moving on. And much more like baseball. You can have several strikeouts. You can strike out for several days. There's not a huge penalty for striking out, a little one. But boy, you hit a home run. And there's a great asymmetrical payback in that. In fact, just one more hit a week in baseball will bring you somewhere between $10 and $15 million if you're somewhere batting around 300 and you can just hit one more base hit every week. $10 million. There's a great deal between those at, when you're talking about 30 at-bats a week or something, sometimes more, it is interesting to see that just one more hit pays you off that much. And that is the heart of asymmetrical rewards in trading exploration in it. Of course, I was worried more about Google dropping a Baby Ruth in the punch bowl. And the problem is, even today, when you go through and I did listen to the conference call on Google, they won't tell you how much money they're making in YouTube. So I can't even now tell you that my thesis is right, and that is where a lot of the money came. Part of it came from cost cutting. We know that. But that does not explain the rest. Was it mobile? Was it these ads on YouTube that are now flooding YouTube channels, which I watch a great deal of by now? Oh, boy. Larry Zonka was a handsome man. But I do digress. Let's get to a little bit of history.
That it's all just a little bit of history repeating.
In this day in 1995, the NASDAQ Composite Index rises 6.56 points. Woo! Closes at a record 1,005.89 cents. It's the first finish above 1,000 in the NASDAQ ever on this day in 1995. In 1955, Disneyland, Walt Disney's metropolis of nostalgia, fantasy, and futurism, opens on July 17, 1955. 17 million theme park was built on 160 acres of former orange groves in Anaheim, California, and soon brought in a staggering profits. And one of my brushes with fame, one of my first jobs was taking photographs of football and basketball and baseball games all around the city, Kansas City, where I grew up. And when I was 16, I was driving around every Friday night with my press pass, taking photographs everywhere. I'd show up about midnight downtown in the exact same building, in the exact same office where Walt Disney used to draw his cartoons. They had the desk over in the corner where his mouse supposedly had been. But, of course, nothing but a bunch of drunk newspaper reporters. By the way, all those old movies where the guys had the bottle of whiskey or whatever in their drawers, absolutely true as far as my experience. They were all drunks and heavy drinkers. At least the ones that I saw there that were working late at night for the next morning's paper. We'll be back in a minute. In 1861, the paper first that makes money payable on demand is green, and where we get greenbacks from. That ends history. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Breaking the law. Well, I'm sure this is one that Tom O'Brien will love. FINRA orders Wells Fargo's, Raymond James, and LPL Financial to pay more than $30 million in restitution to retirement accounts and charities overcharged for mutual funds. It just never stops, does it? This is not a great deal of money in the scheme of things, but if you dig farther into this thing that I read this morning, these guys are taking money from widows and orphans. I guess the truth, there's just, you just can't stop these guys from taking money, can you? If they see money, it doesn't matter whose it is. They're more than willing to take money from them in any form whatsoever. I just thought it was very interesting. Not a lot of money in the scheme of things, and I'm pretty sure that none of these people are going to see a dime of it. Sure, probably there's attorneys that'll also be just as disgustingly in the way as, of course, these major broker-dealers. But this seems like every day there is one more of these things. Kind of like speeding, is handing out speeding tickets at the Indianapolis 500. Just not a lot of point to it, is it? They just go on. Yeah, anyway, I thought it was very interesting. I've got a lot of stuff. I just didn't have time to get it all together before the show. I've been spending a lot of time listening last night and today for the and through the earnings calls to see what's going on. So I'm just going to go through some of the things that before we get into charts that I find very interesting hit the news. Very interesting article yesterday about McDonald's from all its affiliates, not the store owned or the corporate owned stores out there. And boy, these guys are incredibly bearish on their future and the ability to make money in the near future. We had some people out here that were pushing a new thing called Jet. I haven't had a chance to check it out, but apparently it is going to be a competitor to Amazon. While it probably doesn't have anything to do with anything, it did hit me. And Kenneth Cole, who's, I guess, a big designer and clothes manufacturer, guy looks just like Eric Clapton. Gold is at 5 years low at lows. We'll talk more about that. Had a big knockdown drag out with Andy Heck about whether there's anything as known as intrinsic value, mostly because I had an argument with him 6 months ago, or maybe even 9 months ago, about him using nominal value, because I said nominal value is what is it? And of course, no one really knows, but they like to throw it around on CNBC. And I got
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, it looks like the feds tried to keep me off the air. I saw the black helicopters out circling, but they couldn't keep me down. Anyway, we're back. Hopefully the gremlins are gone. Drones are still in the air, though, so we have to wonder about what's going on. Anyway, what else we were talking about? Herb Greenberg. What else is going on out here? McDonald's. I think I hit all the stuff that I wanted to talk about before we went into the break. A few stocks out here moving of interest to me other than the ones everybody's talking about. Best Buy headed down in a fairly decent hurry. It's going to test this low that we just had not too long ago, the $32.56 low at 4.6 million shares. We've got 7.5 million shares. It had a previous low at 10 million shares. So the chart's not as clear as it could be, but it is problematic. The people in the den. They're interesting. But it is that. Question in the den, and then I'll check my email also, was what do I see coming up on Apple? I tell you what, you had a lower, higher volume low out here. You have a push up here to the top. Almost all of this, I think, from the lows was a PR push from Apple. And it is very interesting to me that everybody believes that someone is going to buy yet another new iPhone within, what, 9 months of the last one coming out? How long has the other one been out? So it is interesting. I don't like the energy on this leg up. I'll tell you that. It is not all that exciting. As far as I can tell, Apple is still in a trading range. It has several failed products out there. As far as I can tell, the watch thing is a bust, at least for now. Maybe in October or November, maybe they have new stuff coming out. Maybe they've got a killer application I'm unaware of. The Macintosh was a total failure until someone wandered in off the street for Apple in, 1986 and said, hey, I've got this desktop publishing application. If not, we probably would never heard again about Steve Jobs, would have never heard anything more about Apple. There wouldn't have been any. They would have just been gone if it wasn't for Aldous. So there's always the chance that someone out there has the killer app for the watch, but a lot of videos right now of people taking their watch off and throwing it in the drawer, which is not good. Of course, their other foray that they spent $3 billion on was going into music streaming. That seems to be somewhat of a bust. Apple Pay, everybody told me just how ubiquitous it would be. They haven't been able to get it here in the United States. In fact, they're facing major problems trying to get it going over in England right now. A lot of press on it this week. I just don't see it. Just looks like it's in an upper trading range. Am I saying that there's Armageddon, dogs and cats living together, real wrath of God stuff at the end of the road for Apple? No, it may be. I just think it's headed back down to 115, which is not a major problem out here. Of course, I wrote a little bit more about it in the newsletter today, so I'll probably lay off there in the Tech Insider of why I think there's a new phone. But to me, it's just not a whole lot. Still looking for 115 out here. It looks to me like every gambler in the world that was around in 2000 that was betting on companies like iOmega and Qualcomm at the highs are back at it. Netflix may be worth it. It's very tough for me to say that it is. Other things of interest out here, though, are, of course, Google, which probably is worth it, and caught a lot of people on the wrong side of that trade. Like I said, I couldn't tell which side it was on, but options were saying extremely wide moves yesterday, and that should have told you that there was going to be something. But like I said, I was on the wrong side of that one. But I think I can take a loss of $250 on some options. Not a big deal. You can always give me a call at 877-927-6648. And I would look forward to your phone calls because it is options expiration. Not a lot happening out here today. What we're really setting up for is what happens next week. And the question is, how is this market? We're back up to flat on the S&P today. How is this market going to react to $100 on the dollar index? How is this market going to react to probably retesting the highs in the bond market, at least the 10-year yield, which is kind of the gold standard? What happens to gold when that happens? And does that disconnect all commodities? Crude's trying to hold $50 out here. I suspect it's probably headed a little lower. But again, I wouldn't be putting new money to work either long or short in crude right now. In fact, I did have an email here show up about what I thought about maybe going long miners or even shorting miners out here for gold. And I'm thinking that you probably, if you were going to do anything, let me put it this way, I wouldn't go long or short them with equities in anything or ETFs at the moment, but I would be looking at options because you're going to want to especially limit your potential losses either up or down to an absolute minimum. The same kind of hints that were telling us a huge move in eBay, or not in eBay, in Google yesterday are in gold now. And there's not a lot of people that have a good feel for where this is going, but you could, it would not surprise me to see up or down $100 in gold. Like I said, I would, the only way I'd be looking at this either long or short, which you can make cases for both. But the way this thing is working out, in fact, let's bring up the GLD. With just slower and slower drops, you're back through 5-year lows on gold. The ETF doesn't look all that bad. But unfortunately, like I've said before, in fact, I've said this for a year, and I've gotten a lot of hate mail. Oh, I love your hate mail, by the way. Make sure and send some more gold hate mail to me. It is what I've thought, which is I'm looking for some kind of huge washout in this thing because I want to buy it for the next few years, not for the next few months. I know there's a lot of money to be made trading and maybe even trading it today long and or short. I just don't have a very good feel for it. I've made good money in gold, but it's been when I've had the absolute faith that it is either hit bottom or hit a high. And right now, I have neither. But to me, in past occurrences of this, it's always blown down 50, $100 or something like that. Washed everybody out, made sure everybody's disgusted with it. And that may be a better description of anything that I'm looking for than on a chart, and that is complete demoralization. And I still don't see people as demoralized as I thought that they would be when gold was at lows. And again, as far as I'm concerned, if we continue to see, 250 probably next week, if my call on $100 on the dollar index is correct, then we're going to see a lot of pain in commodities next week. And it just depends on what you want. But I keep your powder dry. I wouldn't be short, wouldn't be long unless I was playing options. And even then, I don't have a good feel for it other than, like I said, I want complete demoralization. I want boredom. I want this thing going sideways for months. It's done everything but give me a sign that says that there is a long-term low in, which is what I'm looking for. Because I think 1,800, 1,900 is doable whenever this thing does bottom out. But again, a lot of times these things, will have nice reactions off lows. But normally the one where you're going to make the life-changing money is going to be either a long sideways action or a washout down at lower lows. What else? Okay. Again, see if I have anything else out here. Oh, we were talking about Best Buy. And I tell you what, I've been in the store, and it's several times. I talked about it yesterday that I was over there buying another SSD for $60. The same one that was $200 a year ago at this time. $60 today, or yesterday, actually. $200 a year ago. And I think that's got to tell you all that you need to know, other than the fact that maybe they're making money on iPhones out there at Best Buy. But the rest of it is incredibly tough, very slow sales in television. I went to 3 different stores out there. In fact, on the way home from doing the Tech Insider show today with Tom, I'll be stopping by yet another one. And I'll just go in there and talk to the people selling stuff and say, what's your big seller? It's been quiet. Everybody ready to buy stuff. And normally the employees there are tell me enough. Of course, a smaller sample and maybe anecdotal, but a good way to get information. Really trade what you see, which is available in retail outlets everywhere. Of course, Kansas City Southern, nice pop out of this one. And again, we talked about it earlier this week, that most of these stocks had their earnings to bankruptcy level. They continue to move the earnings down, and then, surprise, surprise, they beat them. Was the news really that good in Kansas City Southern? No. A lot of people were expecting these things to plummet down. And, of course, we beat expectations. Well, if I move the high jump bar down to 1 foot, I think I'm going to make it over it. And that is the real problem out here, is that they're conning people into believing that somehow this was a fantastic earning season in some of these stocks. I will say Google is the exception. I will say more likely Intel is more the rule, and we'll get back to that in just a second as we have time. But it is very interesting to watch this pop out here. You got some decent volume, got a lot of people sitting on the wrong side of this trade, but I think probably if you were still short, maybe a little greedy. Malwarebytes, still recommended from the den? The answer is yes. I use a combination of Malwarebytes and Avast for my 2 different security products. And I think both of those are probably the best match of working with both. Not one of them gets everything, but between the 2, they've kept me virus-free. Even with the onslaught of the hackerdom this week, I still did all my scans, found absolutely nothing. Did find something that was very interesting, though, more in news. We'll talk about that in the Tech Insider Hour, of those hackers from Italy and how they got stuff done and how they got stuff into both the iPhone store and the Android store for their cyber master overlords. We'll talk more about that. What else do we have out here? SFY, CE. Let's take a quick look at CE because this one's getting hammered today off at 6%. Celanese Corporation went all the way down to fill its gap. Some decent volume. I guess it doesn't matter how bad anything is on a pharma stock. Now, you have to buy it if it pulls back. It looks like that is the pattern out here today. Volume's going to be, I guess, on a chart basis, you can't really look that bad. I just don't like these. My guess is that you would probably not want to buy unless it got back down to at least today's low at 63.15. I suspect that is not a bad tick out here. Again, we can get into gold, but it is not a pretty picture. GG out here under attack with Gold Corp. These things have blown out the lows. Volume has picked up over yesterday, not as much as you would like. And actually, volume is tailing off from pretty much, October 31st of last year as we broke these. You had some better volume, but it continues to head down. And unfortunately, the experience is that these things tend to blow out. And I don't see the blowout or the exhaustion volume at a low in Gold Corp. Other ones out here, let's take a look at ABX real quick. ABX. And Barrick, same thing. I mean, you blew these lows out. There was higher volume. They didn't hold those lows. They've continued lower. This one actually, volume in the last 2 days has been fairly decent. We could probably get some kind of reaction. I think the answer is yes. Could we bounce a little? Man, that would probably be your opportunity to get out of these things until you get some kind of good sign of a low out here. Okay, other stocks of interest. What else do we have out here? MDRX. MDRX. Nice little pop in all scripts. What is that? Announced preliminary Q2 EPSs and revenues outlooks that were good. Didn't hold the high of the day, which is always interesting in these stocks coming back off. The reason I'm saying it's interesting is it really needs to stay above this May 22nd, $14.66 high. And that had 7.1 million shares. You had all the volume in the world today. It should have probably held up a little bit better as it blew through those highs. You got 10 million shares already. So not a bearish chart out there, just one that these things, when they go above the previous highs, we've chronicled it for the last couple of months. How many of these things have come right back into the trading range, volume or not, light volume, heavy volume, right back into the trading range. We'll be back. We've got a few more stocks to look at. We've got some toys to look at when we come back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I think I've got a new theme for Janet Yellen out here. Everybody asked me what I think of this one. I think that's her answer to everything. Saved by zero. Zero interest rates. Anyway, see if I can get my charts back up here. We'll get through the rest of stocks moving. We'll see you in the second hour of the Tom O'Brien Show. I'll be in my vehicle speeding over at light speed to check it out. We were going to look at toys, and Mattel reported Q2 earnings of $0.01 a share, including non-recurring items, a nickel better. Of course, revenues fell 7%, and no one wants to be part of a toy company that doesn't have a lot of movies coming out. And apparently, while you can make horrible movies about things like Battleship and Transformers, it's hard to make a movie about something Mattel made. I'm waiting for Hot Wheels, because you got to figure that's the next one out. But wasn't Hot Wheels just that other series of movies from Vin Diesel about drag racing in the streets? Wasn't that Mattel's whole thing? I had Hot Wheels as a kid. Anyway, lots of volume on the way down here. You got to look at this thing, at least retesting the lows of $22.32. That's the April 2nd low as we look at that one. Other stocks out here. Of course, crude not being able to do anything like the rest of the commodities. And Lynn Energy is one of these that's yet again down today, off another 5%. Of course, it's all about oil and gas. And, you know, you would say, you know, we broke lows without volume, but just like it didn't seem to matter a lot on the way up, a lot of these companies continue their meltdown. Normally, when you get into a pattern like this, people will continue to short these things until they can't short them any longer. That's normally at a $5 level. I would suspect that we've gotten down this far. Look for this thing, first real decent bounce in Lynn to be at probably about $5. CMA is another one I wanted to look at before we had a chance to finish out here. Comerica missed Q2 consensus estimates. Beat on revenues, but just missed on everything else. And getting punished out here. Down on decent volume. Next low is at $44.36. I think you can make an excellent case that it's blown through its last low of the 8th. That had 5 million shares, 5.3 million shares. We've already beaten that by 5.6 million shares. It looks like it's going to be out there. Not a high volume low, but the next low we really have out here is the $44.36 low, and maybe some consolidation at $46. So maybe another buck down before this thing continues to move. So that is problematic. See if there's anything else out here. Of course, I know one of the members of the Den either worked or is still working for Hertz. He told me what problems they had with management out there maybe a year ago. And it was up fairly strongly today, basically because they came out with their books and said these books are not phony. Our books before were phony, but you can really trust us now. These books are not phony. No, that's Hertz. This is Avis, isn't it? Outperforming in sympathy after car rental. Yeah, Pierre Hertz was up 13% on the day. Finally filed its 10K and reaffirmed. So maybe that's it, just a bank shot on that. HTZ is the other one. There we go. And that's the pop for just saying that we are criminals no more, up on 29 million shares. Anyway, we'll be over in just a little bit. We'll talk to Tom O'Brien about technology. Big week for technology. I got a ton of stuff to talk about. In the meantime, sell when you can, not when you have to. And we'll see you and meet again. 2 o'clock Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.